All right, let's talk about what just happened. The last 6 days, man, the Plazm protocol went through a true trial by fire. And today, we're going to dive deep into the data, because what it shows isn't a story of panic. Not at all. It's a story of some serious, profound holder conviction.
Okay, let's just get right to the headline number, shall we? As of today, day 67, a whopping 64% of the total Plazm supply is staked. That's not just a high number, that is a brand new all-time high, the highest it's ever been.
And right away, you're probably asking the same thing I was. How in the world did this happen? I mean, this record wasn't set when things were calm and sunny. No, this was forged right in the middle of a brutal 50% crash, a crazy bounce, and just stomach-churning volatility. So seriously, how is that even possible?
Well, to get to the bottom of it, we really have to look at this 6-day period for what it was, a gauntlet. It was this intense pressure cooker that put everyone to the test, and it really revealed what holders believe about the future of this protocol.
Just look at this timeline. It's really something else. Day 62, the price absolutely tanks, crashes 42%, and what happens? Staking goes up. Days 63 and 64, the bleeding continues, price keeps dropping, staking, it just keeps climbing. Then, day 66, we get this insane 103% bounce, a moment of pure euphoria, right? And what do holders do? They stake more. It didn't matter what was happening. Crash, bleed, bounce, the response was always the same.
So that's the big takeaway right there. 6 days. Every possible market condition you can imagine, from absolute terror to wild greed. And through it all, there was only one dominant behavior: stake. That's it. Just stake. And here's what that looks like in raw numbers. At the start of this whole thing, on day 62, we had about 66,600 Plazm staked. Just 6 days later, we're sitting at almost 99,000. That's an increase of 32,300 tokens, a staggering 48% growth in the stake supply, right in the middle of peak chaos. Incredible!
Okay, so that's the what, but now for the really interesting part, the why. What was going through everyone's heads? What was the driver that made so many people double down when, let's be honest, most would have been sprinting for the exit?
Well, it really all boils down to a core economic idea: time preference. Basically, it's choosing a bigger reward later over a smaller reward right now. By staking, holders were actively giving up their ability to sell in the short term. They sacrificed that immediate liquidity, making a bet on much bigger returns down the road. It's a massive vote of confidence in the long-term game.
And you know, when you really break it down, it was the only rational choice for anyone with a long-term view. I mean, think about it. The alternative? Selling into that crash? You're just locking in your losses, paying slippage, and basically donating your tokens to the burn mechanism. The smart money, the rational choice, was to stake. It was a golden opportunity to scoop up time-squared shares at a huge discount and maximize your earning power.
And boy, did they accumulate. In just those 6 days, the total number of shares in the protocol shot up by 200 million. That's a 15% jump in the entire system's earning power. It means that the people who staked and held through the storm, well, they're now in an exponentially more powerful position.
So this huge wave of staking wasn't just a number on a chart. It literally transformed the entire protocol. Let's look at the results of all that conviction.
Okay, so this is the before picture. This is day 62, right before the chaos really hit. You can see 58% of the supply was staked, and about 4% was liquid and ready to be traded on the open market.
And here's the after. Wow! Just look at that difference. That blue staked section swelled up to 64%, and that little liquid slice, it got squeezed down to just 2%. You don't even need the numbers. The chart itself tells the whole story. All that supply just got vacuumed up from the market and locked away. This table just puts it in black and white. The staked supply percentage jumped up by a full 6 points. But the big story here is the liquid supply, the tokens available to be traded. It was cut in half, from 4% all the way down to 2%. That is a massive supply shock.
And what that means is simple. The protocol is now more tightly held by long-term believers than ever before, period. The supply available for sale is at a historic low.
You know, what's also amazing is that while all this drama was unfolding, the protocol's engine just kept humming along in the background. The USDC pools, they grew every single one of those 6 days. The protocol generated over $2,500 in yield for stakers, and the burn mechanism actually sped up, taking another 3,500 Plazm out of circulation forever.
So why is this so important right now? Well, because all of this conviction, all of this strength puts the protocol in an insanely strong position for what's coming next. Let's talk about the day 78 advantage and where this all pays off.
We are now just 11 days away from that big day 78 token release. And the protocol is heading into it with 64% of the supply staked and only 2% liquid. That is a position of absolute record strength. And for all those stakers who held the line, their conviction is about to pay off big time. That time-squared advantage they've been building gives them a huge compounding edge over anyone who panicked and sold.
And really, this all comes down to one core idea. It's something worth remembering. Price. Price just measures sentiment in the moment. It's fickle. It's fear and greed. But staking? That's different. Staking measures conviction over time. When you look at all this data, there's really only one conclusion you can draw. The numbers are clear, they're not lying. Holder conviction in this protocol is officially at an all-time high. And of course, just a quick reminder that this content is for educational and informational purposes only. Nothing here is financial advice. You should always do your own research before making any investment decisions.